Good afternoon, everybody. I'm here with new employee, Sarah Woolley, and she's joined us a week and a half ago and is new to our team and heading up growth for both offices. And we thought we would give a little bit of a budget update for a lot of our clients after lots of questions from the team and clients as to how some of the things are going to affect our local market more than, I guess, a little of the national commentary that's probably coming out there. So first, welcome, Sarah, to
Thanks.
live stream. So we thought we'll just run through a few topics that are probably going to be some questions, and then obviously a lot of this is financial advice, not real estate people advice. So talk to the smarter people than us for some of those things to go a bit deeper into your specific situation, but we'll sort of talk about some of the things that are going to affect Southern Tassie and our parts of the market today and see if that helps out a bit. So so some of the bits and pieces, I guess, around real estate, we'll start off with the amount of new homes that are going to be built. So it did look like that's going to shift a little bit. So they're talking about now a bit of a downturn in the amount of new homes, and that means a little bit less building, which might be intentional to try and slow the building market a little bit potentially, while still allowing some of the rental properties to be sold and continue a similar supply level. So that's something to look at as a simple term of the new homes. So that's kind of one topic there.
So if someone's getting a new house built and they want to have that as investment property, how would this legislation change?
Not a lot, but they can still depreciate that as a new building. So, and that's probably one good thing they've left. So they want people to build new houses and keep them as rental properties.
Yeah.
I think the depreciation you need specialist advice around, because a lot of people don't realise that can catch up with you on capital gains later.
Yeah.
And now with the capital gains going to be higher, that the reason, like considering whether you should depreciate or not, is going to be a real hot topic with your financial planner as to whether you depreciate or not depreciate it from the start, I guess.
Yes. So, and the capital gains has been indexed, so that would change.
Yeah, so index and cap. So it's got a 30% minimum and it's got indexation, and probably the people I see that hurting the most will be retired people, because if you're working, by the time the capital gains tax filtered through with the discount and then it went on to your level of income, you were still paying a reasonable amount because of your level of income. Where if you were retired and you weren't earning much money or any money, then that was a pretty big discount from the total.
Definitely.
Where I think this minimum 30% will really hurt if someone was only going to pay 5 or 10% before. Then through to 30, by the time it filters through their income tax and things, will be a massive difference for some of those retired people who have geared up their retirement around selling off their rental property at 70 or something and living on that. And so they're sort of some of the ones that it'll probably hurt more. I think young people, if they're buying rental properties and selling while working, it might be a bit worse off, but probably generally not dramatically worse off than what it might have been, because they were already paying a 50% discount and then earning 30, 40, 50, 47% tax rate, whatever they are on top of that. So it was still a reasonable proportion of tax going out. So it will be more, but not. Do
you think it will change the landscape of the type of investor, of young versus more mature? Or
I think it'll make people think a lot more about what to invest in, and it will be an incentive to do that new home thing, but not sure where the new homes are going to come from.
They're pulling back on the new home builds, but encouraging that for investors.
And just the land supply, because of the cost of build for the last few years and the lack of releasing of land in the areas, then where do people build the houses, and where's the land that's affordable to build the rental properties, because you can't buy expensive land and put them on, because then you'd have to charge a fortune in rent, which isn't going to happen in Tassie. So I think that's kind of the bit that might be. And look, there's probably other things in the budget that are very contingent on some things happening to have the money to do other things. But I feel like that's probably one that might be factored in and may not be delivered upon, I guess. But we'll see there. So,
do you think it'll impact rent prices drastically, or that's down the track once these kick in?
It's interesting. I think it'll probably impact inflation, and inflation rent will probably be something like other things with inflation that will be there. It'll feel like there'll be a lot of landlord pressure from investors who have geared their lives up to be investors, and that's their only sole income, and they work on that and as a full-time job and have multiple properties. Then the pressure for that person in that seat will be much higher. So I feel like the demand for the rent increases will be different, and if the supply of new houses isn't fixed, then that will probably be investor driven, and potentially might be tricky for tenants, because we've been in a tough market for tenants for a couple of years. So we don't have a heap of spare houses for tenants to go. So this is where that is, and it doesn't look like this is going to incentivise investing into property to make people buy houses to rent out. It's incentivising more people to buy the houses, prices to potentially not be going up, so that more people can get into them. So that's sort of means more people not being renters and being first home buyers. That's, it presumes they want to do that for a start. Right. If they don't want to do that, then I'm not sure how that'll affect, but I think it probably hasn't addressed supply at all any more than was already addressed. So demand is driven by how many babies are being born and how many people are moving with immigration, and immigration numbers have been huge the last few years, and the amount of houses built compared to population increases lagging. So that's putting supply rents supply high. So I think that's going to be a hard one to see. But it looks like I can't see rent prices coming down. I think they probably will go up faster than they have been going up, probably. So.
Affordability and income ratio is also going to be, triggered by that as well.
Yeah.
Because the incomes aren't matching the inflation rates. So.
No, and while some of the budgets and some of the governments talk about we need to change how we're living, and it might be one of those situations where share housing starts becoming more popular and rents do increase, but people have to look at a lot more share housing type options and things like that, which are not ideal, and a lot of people don't want to live in those situations, but the market might force that in if the supply is not there and all the other things happen. So so that inflation also impacts the interest rates as well. Yes, it will. I can't see too many interest rate saving kind of things, especially, I mean, some of that you can't do much about, obviously, with fuel and wars and things. But I think generally, if interest rates do continue to a lot of the things will probably put pressure on that. So if we get more interest rate rises, that's going to put more pressure on the rental side of things to increase rents as well. So I think, it might be might hopefully it doesn't go the way that it did in the 90s, but that some of the commentary around that is fear mongering around it being like that again already. But I think it's still in a pretty good place, and I think ultimately a lot of the shifts are minor shifts, so they will have a more impact in 28 and 32 and things like that than what they will next year and the year after for most people. So
definitely.
I think the other one's the amount of new buyers into the market that they've forecast at 75,000. It sounds like a really big number. I did some maths on it. So 75,000, if you looked at that over the 10 years, is 7,500 a year. If you looked at that into how the population of Australia, Tassie's 2.1% of that. So that's 157 homes a year. And then you look at that by local government area, it was 5-point-something homes per local government area. Tassie per year. Buyers, into the market. So 5 buyers across the whole LGA. If there's 500 sales in an LGA each year or something, it's sort of such a small amount that it's not going to really make as much difference as, say, one of like the deposit schemes or some of the My Home schemes or the things that are already in place. They make a big difference, where this I don't think is going to change. Like we won't notice it in the market at all from a supply and demand with that small. That's a very small amount of people really. So it's why they're saying 10 years. They're not saying 75,000 this year. They're saying
definitely
75 over 10 years. So that's I don't think something to really pay too much attention to.
No.
I guess. So
Yeah.
So look, I think get a good accountant, financial planner, and look at your personal strategy. I think there's going to be a lot come out of it as to how people look at it. Some of the trusts and some of the other structures affect how some property is owned as well. But ultimately, a lot of it is trying to they're winding back any discounts that have been built in over the years. So ultimately, they're saying, okay, well, instead of you getting a discount here, we really want everyone just to pay a fair amount of tax on all the money they make out of anything, really is. Whether that's wages or any investment, we'd like the same sort of proportion across the board, whether it's from a business, a trust or something. And a lot of these measures is like in a simple way doing that is trying to get the similar amount of tax out of everything. There is an argument that you've already earned the money on when you invest into it to pay the tax on it, and a lot of people will talk about that. But I guess there's also potentially a shift to principal residence investing that a lot of people might go, okay, well, sell off my 3 rental properties and go and buy a mansion and live in that. So there's no tax, which right now is probably an okay move.
Yeah, the capital assets will change.
But then there's also talk about what about death taxes and what about taxing the principal residence. So if something like that changed next year's budget or in 4 years' time budget, you could make all these moves and then the same tax rates apply to some of the other things as well. And we're back in a position where it sort of isn't a good say. I'll leave the crystal ball thinking to others, but I think that's something to be to consider and see how that might impact people. But ultimately, it probably will mean a few people might sell in the next year or two. Some of the I think it won't affect a lot of people while the market's not rising because the capital gain will be assessed at the previous rate to now, and then it will be the new rates moving forward in the future. So it'll probably affect people in through the next growth cycle. If that's in 2 or 10 years or whatever, and the house prices increase dramatically, that's where the tax revenue will be found in that. Where if someone's selling something now or in the next couple of years, realistic, if the values are the same, it's not going to have any impact on that in the short term. So I think that's probably a bit of a summary for there. I think we've probably held everyone up long enough, so that'll hopefully help out some things. Like I said, feel free to reach out to any of the team, and also keep an eye on the minor detail. We haven't looked through all of that yet and see, so I'm sure there'll be lots of things coming out over the next few weeks, but ultimately that's probably a high level rundown, and we'll see what happens next. So thanks for tuning in, and we'll see you next time.